Hey, good afternoon, everyone. This is Trader Tim from eminimind.com doing a Monday market analysis video for the week. Going to keep things short and sweet today as I'm a little short on time. We've got a pretty good looking week in terms of news announcements. Tomorrow's pretty quiet, but then Wednesday, Thursday, Friday, things like consumer price index on Wednesday, jobless claims Thursday, housing starts Friday. Those are some good indicators along with consumer sentiment on Friday that should help us sort of kind of determine if things are slowing in the economy or if we are indeed just in a short correction, letting some of this chasing sell off, meaning the traders who were kind of on the sidelines and then fear of missing out, chasing up at these highs. A lot of what is sold off are the traders who have kind of come to the party late and closed out of those positions. Stops get hit. You get into a little bit bigger institutional selling with, you know, 4% down days. But for the most part, if signs this week in things like housing market index and consumer sentiment and housing starts are still looking strong or at least flattening out, that's okay. If we go, for example, to a monthly chart, we can really see that, it's really not anything too out of the ordinary to have a kind of this kind of a correction. It's just been so many years without this kind of a move. People tend to forget. And we had it back in 2011, 2015, where we mostly went sideways for 2015. But when you look at it in the monthly context, it's just a consolidation before the next leg higher. So, you know, are we going to go sideways for the entire year of 2018? It's hard to say at this point. It's so early on. But even if we did, it doesn't mean that the bull run is over. We would really need to come all the way halfway back that I have drawn up here down to 2340, and that would still be essentially in bull territory. We'd have to break the 61.8 and retest these 2015, 2016 highs to really get into a bear market, longer term bear market. Sure, we could trend lower into 2340s. Right now the ES is sitting at about 2650, 2655, and that would, 2350. So you're talking 300 points in the ES, which, yeah, that's a big number, but I mean, really, when you look at it, it's like, if you think about Bitcoin, you could say, well, Bitcoin's is trading at 9,000. And you could look at it, the glass half empty, and say, well, it was trading at 19,000 and it pulled back to 9,000. Or you could say, look at the glass half full and say, hey, you know, a year ago it was trading at 2,000 and now it's at 9,000. So even if the market pulls back, we've been going so strong for so long that it doesn't mean that fundamentally the market is changing gears and that we're losing steam over the long-term fundamentals. So if I go to a weekly chart, we can actually, let me go to a daily and I'll show you this short that I had drawn up. I'm going to call this traded down here. I had from highs down to lows from last week. We rallied midweek and then sold off on Friday and then kind of gap or sold off during the day and then rallied back towards the end of the day. So um, the next short would then now has broken today. So what I'm going to do is just draw the next full retracement from highs down to lows and see if tomorrow or the next day we get a reaction at 2703s. And if that happens, if we get a reaction here at 2703s and the market rolls over and we start taking some shorts and then we break lows, then 2450s would be my target on that for the ES. And now you're in a situation where, if we break this trend line here and then close back in it, you'll notice that, we came down, we touched it, we rallied. We came down, we closed right at it, and then Friday we came and moved below it and then closed above it. If we actually close below this trend line, which we'll just call it let's just call it the 2600 level. If the market closes below 2600, then we're in for some longer term sustained selling, it would seem. And that could be wide range, meaning we sell off down to 2450s and then sort of move horizontal for a while, but the general strong uptrend is sort of come to a temporary end. And that could happen even in the context of some strength in fundamental nature of the real estate market or other indicators that are not necessarily directly tied to the stock market. But at this point, I'm not there's no reason to panic or be overly bearish. You just want to be able to adapt and change your opinions as the days and weeks go on. One thing to keep in mind with a big body candle like this on the weekly is we have a lot of inside bar potential. Whereas, these weeks back here, the ranges were pretty small, and we were breaking out of the previous week's range very quickly. And so anything inside this range, 2760s down to 2530s, is going to be a little more volatile and a little more back and forth. With ranges this big, we've seen some good trading opportunities, but just keep that in mind. There will be more back and forth, and so if you're trading on a 512 tick chart, you're probably seeing a lot more price action occurring over, if you just take an hour window. So if we were to go like 9 o'clock this morning, I guess we'd have to zoom out a touch. 9 o'clock to 10 o'clock, if you go back a couple weeks, you would not have this many candles printed over that hour window because there's a lot more activity. So lots of good opportunities to come, and no reason to panic and close out of all your long-term positions and move to cash and do drastic things like that. But watch this 2700 area, and if we get some selling there, if we can't break this swing high at 2727s, then I would look for some good short opportunities to take us down to 2450s. So we'll be doing live trading tomorrow morning. You can check us out at eminimind.com/VIP. Check me out, I should say. I'll be kind of talking through my trades through the morning, narrating my thoughts and answering questions as best I can. So thanks everyone, and have a great week.